Good morning, hello and welcome. You're watching ET Now. I'm Ruchi Bhatia, and just a short while from now, the RBI Governor Shaktikanta Das will be coming out with the monetary policy announcement. Of course, an important one to watch out for, given the fact that this is going to be the first monetary policy announcement after the budget has gone ahead and announced a higher than expected fiscal deficit as well as a borrowing binge as well. So how is the RBI likely to look at it? Of course, joining us to decode that is our consulting editor, Maithili Bhushan as well as Nomura's Sonal Varma. Maithili, hi, good morning. This is Ruchi here. It is widely expected that the MPC is likely to maintain its status quo, but a lot of people say that the three factors that the RBI would be closely watching out for will be, of course, for how long the accommodative stance is going to continue, how is the RBI going to look at the inching up of longer-term bond yields as well as the liquidity situation as well. So how are you looking at these three factors in terms of how the RBI in the Monetary Policy Committee meeting are likely to look at these three issues?
Well, Ruchi, the governor and the MPC has a tough act to follow. Given the rah-rah reviews of the finance minister's budget, I think he'll have to kind of walk an even tighter tightrope, if it's possible to use a term like that, because he has to somehow accommodate the government's larger borrowing. There's 80,000 crore more this year itself and 12 lakh crore last year, assuming that the estimates hold. So he'll have a tough act to follow, particularly because the guidance that he gave last time would have been, presumed on a much smaller fiscal deficit. Well, not much smaller, but certainly smaller than the 9.5 that she has for this year. And we really do not know whether it'll be 9.5 or end up even higher than that. So he'll have to walk a really very tightrope to say, and he really cannot give you any indication of how long the liquidity's position is going to continue, because remember, he said any premature withdrawal will create problems for the economy. Now, what is premature? How do you time it? These are questions that really nobody knows. We only know post the event. So it's going to be a tough act to follow. So let's see how he tries to walk that path. And let's see what kind of a statement he gives, because as you said, there's unlikely to be any policy action. There really is no scope because interest rates are already negative. And the bank's positions, even though if you look at the Sensex, you think everything is hunky-dory. The fact is that we really know that there is a deep underlying rot in the banking system, which has not come out as yet. So let's see how he couches his words. And it'll be interesting to see how exactly he puts it without raising hopes too much, at the same time not compressing, completely dashing all hopes. So it'll be interesting to see what commentary follows today at 10 o'clock.
Right, just about 6 minutes to go for RBI Governor Shaktikanta Das to give his initial comments as well. Maithili, hold that thought. Let's take it across to Sonal Varma as well. Sonal, you heard Maithili there saying that it's going to be a tough task for RBI Governor Shaktikanta Das, given the fact that the budget has gotten very good reviews. Having said that, even though we at ET Now, the poll that we've done suggests that it's likely to be a status quo on the rates, the commentary coming in on the fact that we have seen a higher borrowing. In fact, the borrowing program was close to 12 lakh crore rupees, and the government has said over the next 2 months they will be borrowing about 80,000 crore rupees more from the market. So how would you be looking at the commentary that the RBI is going to make, especially on the borrowing front?
Yes, our expectations are in line with consensus. So looking for both repo, reverse repo rates to be on hold and the accommodative stance to be maintained. I think the bigger focus is really on two things today. One is the RBI's commitment on liquidity, because ever since the announcement of the variable reverse repo, markets are anticipating some sort of a liquidity withdrawal from the RBI. So our view is the RBI is going to, reiterate its commitment to ample liquidity, but this is something that markets will be watching. I think second is the budget, which was clearly a lot more expansionary than most expectations. The question is, what that implies for monetary policy, and in particular, would that imply that with fiscal activism picking up, do we need less of monetary support is the question. I mean, our view is RBI is going to, state that growth is still in the very early stages. So monetary policy, along with fiscal, is going to be accommodative. And second is also in terms of the large borrowing calendar of the government, and focus is going to be on whether there is some announcement around that in order to make it easier for markets to absorb the excess supply that's coming up.
Right. Sonal, on the money market action, one has already seen the yield rise up to a 5-month high. That's a movement of nearly about 18 basis points since the budget. The key factor to watch is, of course, going to be how actively the RBI manages the government borrowing going forward in order to try and check in on the rise in the long-term yield. What options do you think the central bank has at its hands to try and tackle this?
I mean, the main thing would be if the central bank can, buy more of government bonds. So essentially, we are talking about open market operations. But the challenge with that is, of course, that you will be injecting even more liquidity, and the economy at some point in time may not need as much durable liquidity. I mean, our view is the conflict is less daunting in the near term because we haven't really seen any demand side inflationary impulses, and the growth side is also still in the very early stages of pickup. Output gap is still negative, so the RBI can still do open market operations, injecting more liquidity but controlling yields. The other option, of course, they have liquidity neutral, is to use more operation twist to manage the yield curve per se. But as we go forward through the course of FY22, this is going to become a challenge because from the banking system's standpoint, the last 12 months we have seen incremental credit deposit ratio actually come off, whereas as we go forward and growth picks up, credit growth picks up, you will see incremental credit deposit ratios actually rise. So the incremental demand from banks will also be lesser than what it has been in the past. So it's going to be challenging. I think, if the economy is picking up, of course, the broader drift in terms of yields is going to be higher. But the main objective would be to ensure that it's not too sudden and too sharp in terms of moves. And that is something that is going to be a priority and also a medium-term challenge for the Reserve Bank.
Right.